This is the FFR Trading Market Minute, and again, a daily candlestick chart of the S&P 500, or the SPY, the ETF for the S&P 500 here. Last week, I had mentioned because the RSI had crossed back above its moving average on this day here, if they were able to take that high out, I figured we'd get a run up to that 576 level. That didn't happen. Right, we closed lower on that Friday, but we've continued to kind of stair step higher. We opened with an outside gap up today, but you can see they basically have just about filled the gap back to yesterday's. Well, this was actually yesterday's open. Yesterday's close would be down here if they fill it all the way down at some point today. But we did make a higher high during, at least at the gap up on the open here. And you can see our RSI continues to make lower highs here. So this is still telling us that this trend may be weakening. Obviously, if we do pull back and maybe even fill that gap, a downside target below that is the target we had for the downside last week, which is basically this kind of roll reversal. We had resistance here. The market fell off, broke that resistance. That resistance now becomes support. Below that is our 20-period moving average, sitting at the moment around that 560 level. But obviously that will change each day. But that will be another support level below the current market. So we'll see. As we made a new all-time high this morning, we'll see if the market is able to either fill that gap or if it's able to pivot, make a bottom, and eventually start working its way higher again. And we'll watch, again, if we get the RSI crossing back above its moving average, that will be another potentially bullish sign. And that target of 576 is still out there on the upside. But, market is due for some type of correction. This is all kind of euphoria after the Fed announcement and the potential for a soft landing anyway. We shall see. Still a lot of uncertainty out there, so anything could probably spook the market at this point. So keep an eye on the oscillators here and see if we continue to make lower highs in the oscillator and eventually can come down and at least test this support, maybe probably best case getting back down to the 20-period moving average support here. Economic data set to be released next week. Monday, Fed Chairman Powell will be speaking at 1 p.m. Tuesday, ISM Manufacturing PMI. Wednesday's ADP Employment Change. Thursday's ISM Services PMI. And Friday, the average hourly earnings and big non-farm payrolls report. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.